Hey there, folks. Welcome to the Bookkeeping 101 webinar. Just as we're getting settled in, as a way to let me know that you're here and you're ready to participate, and you can hear the sound, you can see the recording, just write a little simple message in the chat box below in the comment section. I want you to write, "I don't need to be good at math to be good at bookkeeping." Just a little check, 1, 2, 3. Something simple. All right. Looks like everything's working, so let's get started. So first of all, thank you so much for taking the time out of your day and coming to this Bookkeeping 101 webinar. I imagine many of you here are likely business owners thinking about starting a business, or maybe some of you are curious about bookkeeping as a career, or you're an experienced bookkeeper who just wants to brush up on the fundamentals. Either way, if you're wanting to walk away from your computer in an hour from now with an idea of how to better understand your business's finances or apply bookkeeping skills, then you're in the right place. So if we haven't met before, my name is Andrew Bloom. I am currently a PhD student in business with a concentration in accounting, which means I am taking courses in things like accounting systems and tax research applications. I also hold the designation of a licensed certified public bookkeeper, as well as that of a QuickBooks Pro advisor. And I'm based in downtown Portland, Oregon. And when I'm not working or studying, I love to play video games, pitch in a softball league, and read a ton of nonfiction and fiction. I currently run a solo account practice called Profit Logic. I help small to medium businesses primarily with bookkeeping services, as well as consultation on accounting systems and setting up QuickBooks, Wave, or bookkeeping processes. And I tend to work with a myriad of industries such as digital marketing agencies, consultants, nonprofits, and so forth. Now, I want you to give me a moment and just hear me out. Personally, I absolutely geek out on accounting and bookkeeping, and it's my goal with you today to get you excited about bookkeeping as well. And let me explain this in a way that makes sense. So it gives me so much satisfaction when I can clean up a client's books or get all their accounts reconciled at the end of the month. And I want to know, do you ever find yourself doom scrolling videos like these, where someone's cleaning something and they're showing the dirty to clean process, kind of like this rug cleaning video here. And yeah, you just see all that dirt go away and all the colors start to come out. And you get this satisfaction, this relief of pure joy because everything looks so much better. And that's what I want you to be feeling about your books as well. When you have clean books and they're organized and you heartily know that you can trust your financial reports to be accurate, it is pure satisfaction. And right now we kind of live in a really turbulent world. Sometimes at the end of the day, I really just appreciate being able to know that the books are clean and organized and there's an answer to the work I do. There is a completion. And I want you to feel that way, or have at least that one area in your life or area in your business where you feel that there's a sense of organization and completion too. I don't doubt that it'll give you a sense of satisfaction. Okay, so here's how the show's going to work. We just completed the end of the intro. So we're here at the intro. And from here, we're going to cover the basics of accounting, such as the difference between bookkeeping and accounting, as well as some accounting fundamentals that will affect every input and output of your bookkeeping. After that, we're going to go right into the most fundamental activity involved in bookkeeping, which is categorizing transactions. So if you think of the analogy of a computer programmer, if accounting is software design, this higher level overlooking a bigger project, then categorizing the transactions is going to be like writing lines of code. And so everything you do with categorizing transactions affects everything else you're going to be doing in your accounting for your business. So If you get the categorization right, then everything else is going to look clean. Now, after that, we're going to cover other bookkeeping tasks. So bookkeeping in action, things like bank reconciliation and producing financial reports, as well as what a bookkeeping routine looks like on a weekly and monthly basis. And lastly, at the end of the presentation, I'll cover some next steps that you can take depending on whether you are in your business or you're thinking about doing your own books and you're considering a career path in bookkeeping. At the end of this video, I also encourage you to ask me any questions you may have in the comments section, and I will happily answer them. So you might have heard before that accounting and bookkeeping are important aspects of running a business. I want to impart on you that not only is bookkeeping important, but it is crucial for maintaining any sense of confidence and control over a business. Here's why. Having a robust and accurate accounting and bookkeeping system is the only way you can properly prepare for taxes. So not just the end of year taxes, but also sales tax and payroll taxes for employees. And the government wants to get paid on time, and the best way to know how much to pay them is to have accurate financial records. It also allows you to lower the chance of any surprise owed taxes, penalties, and having consistently up-to-date books makes for a quicker tax filing season where you can get your taxes filed early without panicking at the last minute when no CPA or tax preparer has any more room on their calendar to take you on as a client. You never want to do your taxes last minute if you can help it. So having accurate books means that you're able to use this reliable data about your business as to whether or not the business is profitable, whether there are expenses that are draining your profitability without a justifiable return on investment. These financial reports also let you know whether your business is improving over time or whether you're just struggling to survive. And lastly, having up-to-date books allows you to confidently meet and more likely access financial funding through banks, credit cards, investors, rental spaces, and partners who are going to want to see your financial records that you can quickly provide. Okay, so at the end of the day, bookkeeping has one primary purpose. It produces financial reports that you can trust. Those reports are what tell you where your business actually stands, not where your bank balance feels like it is. And not you hoping whatever's happening is hopefully profitable. Financial statements basically show you what's financially true. There are three very important reports that every business owner needs to understand, whether you're a publicly traded company on the New York Stock Exchange or you're just a small shop in your hometown. And those are the balance sheet, the profit and loss statement, and the statement of cash flows. Now, the balance sheet shows what your business owns, what it owes, and what's left over at a specific point in time. It answers the question, how much is this business worth right now? And if you were to try to sell it today, how much could you arguably sell it for? Kind of like your net worth as an individual, but for your business. Next, the profit and loss statement shows how much money the business earned, how much it spent, and whether it generated a profit or loss over a period of time. This is where performance shows up, what's working and what's draining resources. It answers the question, how profitable is this business? Usually on a monthly or annual basis. And the statement of cash flows shows only actual cash that's moving in and out of the business during a certain period. It explains why you can be profitable on paper, but still feel really tight on cash. It answers how much cash is available and how much cash do we need. So you don't need to memorize these reports today. What you do need to understand is this, that if the statements are wrong, every decision built on them is going to be riskier than it needs to be. Whether it's pricing decisions, hiring decisions, tax planning, growth plans, all of it depends on whether the numbers are accurate. Good bookkeeping doesn't guarantee success, but bad bookkeeping guarantees uncertainty. Now let's clear up a very common misconception. Bookkeeping and accounting are related, but they are not the same thing. Bookkeeping is a process of recording and organizing financial activity, while accounting is the interpretation and analysis of that information. So, if accounting is like the blueprint of a building, bookkeeping is the act of laying the bricks correctly. No matter how good the blueprint is, if the bricks are crooked, the structure is not going to hold. Does that make sense? This is why fundamentals matter so much and why today's session is going to focus on the structure, not shortcuts. So with accounting, it's a very, very vast field, but there are two primary aspects that we need to cover here in order for you to better understand why quality bookkeeping is more than just data entry. The first is that the ubiquitous practice of accounting that is used professionally and that underlies most accounting software is what's known as double entry accounting. This means that every transaction has two sides. So, for instance, when a client pays for services from your firm, not only did your cash in the bank increase, but so does your sales revenue. Another example is when you buy a software program for your company, not only does your cash in the bank go down, but so does your overall profit for the quarter. While I won't go too deep into how this works on the nitty-gritty level, I want you to know that assuming you can just go into QuickBooks and label transactions willy-nilly, whatever sounds the most accurate, is going to cause your reports to be inaccurate. The other thing I want you to learn today is that there's a very important accounting equation that governs all of double entry accounting. This is the accounting equation. This is the backbone of all accounting systems and double entry accounting based software. So I want you to do your best to keep this simple equation at the forefront of your mind because it plays a huge role in how you do bookkeeping. I'll show you how all this connects soon, but for now I want you to remember this. This equation is assets equals liabilities plus equity. These two sides, the left side of assets and the right side of liabilities and equity, they always need to equal each other. I know it sounds a little scary and a little bit like math, but I promise that you don't need to be good at math to be good at bookkeeping. So let's break it down. First, we have assets. This is what your business owns. These are things like the cash in the bank, inventory, equipment. They're items that have a cash value. Next, we have liabilities. These are things that your business owes to other people, such as a bank loan or a credit card debt or a bill that hasn't been paid yet. And lastly, we have equity. This is the one that confuses people the most because it's thrown around a lot in finance, but it's basically just money. And in this context, it's money that you are entitled to as an owner of the business. So let's look at the accounting equation again. We have assets equals liabilities plus equity. What we're really saying here is that what we have equals who owns it. Always, always, always. These two sides need to be balanced. So let me give you an example. You start your business by investing $100 in the business. What does the business have? That's right. It has $100 in the bank account. And who owns or is entitled to that $100? That's right. You are as the business owner. Let's look at the accounting equation. So $100 of cash in the bank, an asset, equals $100 that you own, or rather that you're entitled to. The accounting equation is pretty easy when you think about it. So let's look at another example. Let's say you take out a loan of $300 from an investor for the business. What do we have? Another $300 cash in the bank, and who's entitled to that $300? Not you. The investor is. I hope you can see now how every transaction affects two accounts. Thus, every transaction that we have is entered into our books will either increase or decrease at least two accounts. That's why it's called double entry. Now, why am I telling you all this instead of just showing you how to use QuickBooks or some other bookkeeping software? Because double entry accounting is the backbone of modern accounting software. That means you cannot be casual about how you categorize your transactions or do your bookkeeping. Now, let's pause for a second. That was a lot, but I want you to pat yourself on the back because you now know more about accounting than most business owners do, and maybe even some bookkeepers. And we're not even done yet. Okay, so another thing about the accounting equation is that every account you'll track in your bookkeeping software is going to fall under one of these categories. From the assets side, we get accounts like cash on hand, the money in your banking checking account, as well as physical assets and money that your clients owe you. From liabilities, we track our credit card accounts or what we might owe on a bank or a bank loan or a credit card. And lastly, equity is a special category because not only does it include what the business owners add or pull out of the business, but it also includes all over the overall revenue. And revenue is basically income minus expenses. So here we see our income and expense accounts as well, such as sales, cost of goods sold, rent, software subscriptions, payroll, and many others that aren't listed here. Now, all of these accounts together are known as the chart of accounts. This is like the architecture or backbone of your bookkeeping. It lists all the accounts that you track, their totals, and each account's going to show in one of the three financial statements that we talked about earlier: the balance sheet, profit and loss statement, and statement of cash flow. Each chart of accounts for different businesses is going to look slightly unique. This is one area where accounting is more of an art than it is a science, as it all depends on how detailed or broadly you want to track all the flow of money in the business, as well as what kind of categories maybe your CPA or your tax return need to be diligently tracked. So here's an example of the chart of accounts that you'll likely see in QuickBooks. Okay, so we covered a wealth of information on accounting basics, such as double entry accounting and how the accounting equation helps create the chart of accounts and financial statements. Now we're going to get into the most important part of bookkeeping that makes up 80% of bookkeeping work, and that's categorizing transactions. You might be wondering why I made this its own category, and that's because it's the fundamental activity of all accounting. The order of information I've been teaching you is highly intentional. Right now, I want you to think of the system of the body. You probably learned this in early biology classes in school, and you know how there's a structure to the body where cells make tissues, and tissues make organs, and organs make up organ systems, which all come together to make the human body. Well, everything we covered has been a part of a system as well. We've covered accounting, which is founded upon the analysis of financial statements, which is derived from the balances on the chart of accounts, which is made up of individual accounts. And now we're going to be looking at the crucial element that affects them all, which is individual transactions. When running a business, just how many times a day, a week, a month, does money change hands in order to provide value to your customers and clients and to keep that business running? It could be hundreds. It could be thousands for bigger businesses. Each one of these needs to be properly categorized, and that's what we're going to cover right now. While there are hundreds of possible categories for your transactions, I believe there are 5 common transactions, general categories of transactions that will make up 90% of your day-to-day interactions. These include income, expenses, transfers, liabilities, and owner's contribution or distribution. Let's look at each one. So income is the money your business brings in, such as through the sale of products or services. You can also have income to your business that is outside of your service scope, such as through interest income from money sitting in the bank, or if you rent a space out, through the property your business owns. Next, we have expenses, which you're probably familiar with, such as advertising, software, wages paid to employees, and so on. Next, we have transactions that don't add or subtract from the business at all, but just represent the movement of money from one account to another, such as paying down a business credit card with money in the business checking account, or moving funds from your PayPal account to your business bank account. And after that, we have the creation of liabilities, such as with obtaining a bank loan or line of credit, or when you purchase something from a vendor but you haven't paid it yet. And lastly, we have owner contribution and distribution transactions. This is when you add money to your business from your personal funds, or you take out earnings from your business to put back into your own pocket. This can also include when you accidentally purchase business goods on your own personal banking account or vice versa. Side note, it is good accounting practice to always have separate business checking and credit accounts that are differentiated from your personal business checking credit card accounts. So that helps avoid those accidents as much as possible. All right, time for a pop quiz. I'm going to name a couple of different transactions, and I want you to type a number in the comments section or mentally in your head, indicating which one of these transaction types you think it is. So 1 is for income, 2 is for expenses, and so on. You get it? Got it? Cool. All right. First one. You get a $5,000 loan from the bank to start your business. Is it income, an expense, a liability, a contribution? That's right. It's a liability. All right, cool. Next. You pay to advertise in the newspaper. I'll give you a second. If you said expense, you got it right. Cool. Moving forward. This one's a little bit harder. You have a client you performed some work for, but they haven't paid you yet. Is this income, an expense, a liability? I feel like I'm hearing different responses here. Maybe not everyone's certain. All right, so in this case, it's what's known as an asset because it's money that's owed to you, even if the cash isn't in the bank yet. So in this case, it is income. All right, one more. If you get this one right, then you're going to have much cleaner books working on your books yourself than most of my clients who came to me after DIYing their books. So let's see if you can get it. All right. You purchase a personal tchotchke for yourself with your business credit card. Is that an expense? Transfer? Something to do with an owner, perhaps? So in this case, this is an owner's distribution. Like I said earlier, it's recommended to keep personal and business accounts separate, but sometimes you just accidentally make these charges. I've done it too. And in that case, in your bookkeeping, you would just treat the expense as a owner's distribution. So good job, folks. You're doing really great, and I'm really impressed by how much you're learning and absorbing all this information that I'm throwing at you. I know it's a lot, but do be proud that you are well on your way to understanding bookkeeping and accounting more than even first-year accounting students. let alone the majority of small business owners. So this is no small thing. By the way, if you feel like you've already learned something new about accounting and bookkeeping by this point, would you let me know by giving this video a thumbs up? It would really help me a lot on my quest to better help educate business owners who want to DIY their books. Thank you so much. Oh, and here's a quick screenshot of the bank feed in QuickBooks. When it comes to categorizing transactions, this is a feature of QuickBooks that lets you connect your bank accounts to your QuickBooks automatically, and you can categorize your business transactions as they are imported. As you can see on this side here, you'd be able to categorize one by one. There's similar bank feeds in other bookkeeping software, and don't worry, we're going to talk about those software options very soon. All right, so now that we've got transactions down, let's talk about a couple of other common bookkeeping tasks and what an effective and responsible bookkeeping routine can look like, particularly if you want to do your own bookkeeping for your business. There are two more bookkeeping tasks that I want you to know about before this session is over. The first is reconciliation, and the second is generation of financial reports. So here's an important question. You're keeping track of your expenses and income and whatnot in your QuickBooks, or God forbid, you're all doing it on a spreadsheet. How do you actually know that the information you're entering is correct? Because at the end of the day, the information QuickBooks pulls from your bank accounts, the expenses you may list on your spreadsheet, this is all just data. Bookkeeping is fundamentally just good record keeping. And in order to trust that the information we have is correct, we have to double check. I don't know about you, but I feel like this is a common trope. But I personally have a stepfather who is really tough. He loved telling me as a child what to do and pointing out when I wasn't doing things right. And as much as I sometimes resent the guy, he actually taught me a lot of things about being responsible. And something he always said that in hindsight is actually really great advice that has been all the more true with doing accounting work is that you should always cut once but measure twice. And that's what we need to be doing with the books as well. So bank reconciliation is how we double check and make sure that the transactions we enter into our accounting software match what's actually going on with the bank. Another good analogy is comparing it to checking your homework against an answer key. Again, this is one of the final lookovers before the information is finalized on the financial statements, so we want to keep an eye out for any errors or mismatched transactions. And for the sake of time, I'm not going to go too deep into how to perform a reconciliation, but at its core, you are comparing transactions in the software to what's on your monthly bank statement, and you go over each transaction one by one, and if there's a discrepancy between the amount recorded versus the amount in your actual bank, you're going to want to have to figure out why that is and fix it. The good news is that you don't need to reconcile every single account in your chart of accounts, but it's a really good idea to do bank reconciliations for any of your physical accounts. So things like bank checking, bank savings accounts, as well as credit card accounts. Here's what the reconciliation page looks like in QuickBooks. At the top, you'll get a handy equation showing the balance from the statement. It's going to show the last month's beginning balance and the ending balance. And this is the cleared balance in the bank and what's noted in QuickBooks. And the goal is to get this difference to 0. And if it's not, then either there are transactions that have been entered but haven't hit the bank yet, there might be missing transactions or transactions that were recorded in the wrong account. So your objective is to problem solve and figure out why the balances don't match. It's a very, very important process in bookkeeping that most business owners who are trying to DIY their books are going to skip entirely because it seems daunting or like extra work. But I promise it's one of the few ways you can easily catch mistakes early and regularly. Remember, misleading reports leads to compromised decision making. The other thing I highly recommend doing on a regular basis is generating financial reports. Again, it's these financial reports that can give you actual data you can use to make decisions in your business. This is why it is important to use bookkeeping software or an optimized spreadsheet beyond just listing your income and expenses on a basic spreadsheet. These programs often have a section where you can download this data, but again, as we know, it's only useful information to the extent that the transactions are accurate. I recommend at least looking at your profit and loss statement on a monthly basis. All right, so now that we've covered some of the most basic bookkeeping tasks, the categorization of transactions, reconciling accounts, and generating reports, let's go over when you should be doing these things if you plan on doing your own books, or when you should expect a quality bookkeeper to do them for you. So depending on the size of your business, you may want to categorize your transactions more often or less often, but generally for full-time businesses, categorization is best performed on a weekly basis. This is a great routine to maintain, and when done regularly, only takes maybe 15 to 30 minutes a week while the transactions are still fresh in your mind. It's a lot easier to remember what your Amazon purchase was for last week than it is trying to remember what you bought 7 months ago without having to take extra time to play detective and look everything up. So just pick a day of the week, like a Sunday, and make that part of what you do to get yourself ready for the week ahead. Then on a monthly basis, when you get your bank statements, so usually around the first or second week of the month, you should perform a reconciliation of all of your physical accounts. I definitely recommend using a spreadsheet to list all of your accounts and check off each month that's reconciled so you can kind of keep track of it. And once those bank accounts are reconciled, be sure to generate your profit and loss statement on a monthly basis too. You can generate a quarterly profit and loss statement or an annual one as well. If you're dependent on cash flow to survive, I recommend generating a cash flow statement each month as well. The balance sheet is less important for regular review unless you're in real estate. But if you're planning on selling or reaching out to investors, it's a good report to stay abreast of and maybe look at it at the end of each year as an annual activity. So we can't really talk about bookkeeping in our modern age without also discussing bookkeeping software. Well, there are a few options in the market and more are coming out each year that are focused on offering AI-powered features. Your gold standard for the industry among accountants will likely continue to be QuickBooks. QuickBooks is the most widely used software and hosts a wealth of features that both business owners and their accountants and bookkeepers can use to stay on top of accounting, but it does come with a bit of a learning curve. And I hate to say it, it's also the most expensive option. But after that, particularly for smaller businesses, solopreneurs, anyone who's doing like consulting service where you're not really having to track projects so much or deal with inventory, I recommend Wave. It's significantly cheaper to use, but I will say it lacks optimization workflow tools for accountants and other more detailed accounting features as QuickBooks. It still is a really great tool, and a lot of my clients use it. As for these other software options that are listed here, I've never worked with Xero or FreshBooks. I did explore them and demoed their platforms, but I didn't really find either of them as useful or intuitive to use as QuickBooks and Wave, and yet they're still more expensive than Wave. We're just going to focus on QuickBooks and Wave in this workshop. Now, I put spreadsheets on the bottom here, but apart from a very small side business with very few expenses, using spreadsheets alone is not robust enough to ensure that you have accurate financial data. I'd rather see you be using Wave's free option that lets you manually enter transactions than try to maintain a clean and accurate spreadsheet. The potential for error is just too high. All right, so here's a really quick glimpse of QuickBooks, their dashboard on the left and the bank feed on the right. That's where you can connect your bank accounts and categorize your transactions. I'm not going to go over how to use the software today, but I do recommend subscribing to my YouTube channel, Profit Logic Accounting, where I do post a lot of tutorial videos on how to use QuickBooks and Wave, and I'm going to recommend some other channels later on as well. And here's a quick view of Wave's dashboard and on the left and the banking feed on the right. Definitely check these two software out if you haven't selected a bookkeeping software for your business yet. Okay, so now you know quite a lot about bookkeeping, from the basics of accounting, categorizing transactions, to bank reconciliations and financial reports, as well as what software you should use. Let's talk about where to go from here. So I have two paths to recommend depending on where you currently are in your journey. Each are contingent on whether you're looking to do your own books or get into bookkeeping as a career, and the other path of what to do if you want to hire help. If you're looking to do your own bookkeeping or start a career in bookkeeping, I can assure you that just poking around QuickBooks and figuring it out is not going to be enough. Remember, software depends on the knowledge of double entry accounting, and you'll want to make sure you have a foundation accounting before trying to do your own books as well. So there are two main steps involved with DIY bookkeeping as I see it. The first is that you want to use resources to learn more about bookkeeping and accounting, and the second is learning the software you want to use. As far as resources go for learning bookkeeping and accounting, a couple of free or cheap options include obviously scrapping what knowledge you can from free videos on YouTube. But for a more structured and integrated approach, I recommend checking out Intuit's bookkeeping course on Coursera. If you don't already know, Intuit is a parent company behind QuickBooks, as well as TurboTax and some other name brands. And I've gone through this course myself, and it's a very thorough and a great foundation overlook on how to do bookkeeping. Less of the practical stuff, but more of the foundation of accounting knowledge. And I'm going to be sure to link this resource and the other resources I mentioned in the comments section below, so you can find links to these here. This course is pretty easy to follow. It does take time to learn, but I do highly recommend it. And I think you can audit it for free. Now, the other step for bookkeeping is to learn the software that you want to use for bookkeeping. If you're going the QuickBooks route, you can use Intuit's own training program for bookkeepers. It's their Pro Advisor series. Their QuickBooks One course should be enough to get an idea how to do the basic things you need to do in QuickBooks. It's pretty thorough and it'll teach you everything, but I won't lie, it can be a lot to take in. It's a lot of going over features and not necessarily exactly how you'd use them in practical situations. So two other resources that I really like are YouTube tutorials made by Hector Garcia. He's pretty good at explaining a lot of different QuickBooks features pretty quickly. And if you want a really easy and quick to learn course, although not necessarily free, I recommend checking out Mark Smolin's Udemy course on mastering QuickBooks. I've taken that one as well. Super easy to understand. He goes over more of that practical end of how to use QuickBooks that I think the Pro Advisor series doesn't really cover as much. But again, it does cost, I think, probably like $15, $20 on Udemy. And as for, again, I'll link this all in the description box below. As for Wave, while Wave doesn't have its own training course per se, you can find a lot of resources on their main website explaining how to use their features. And I also have a free course on mastering Wave on the Profit Logic YouTube channel, so I recommend checking that out. I'll add the link below as well. All right, moving forward. Now, for some of you watching, your business is in a place where you're probably trying to wear all the hats at once and now you're seeing some considerable profit, and you believe it's time to start delegating the work you do to people who might be better at doing it, while also freeing up your own time. And hiring a bookkeeper is one of the first and easy ways to start delegating within your business. So let's go over what you should expect from a remote bookkeeper, what you should look for in a candidate, and how much you should expect to pay. What can you expect from a bookkeeper? At minimum, they need knowledge of double entry accounting. This is a given, but because there are no education requirements to perform bookkeeping services, there are many bookkeepers out there who think all they need to do is categorize transactions to whatever sounds right. I'm here to tell you that they need to know basic accounting in order to make sure your books are accurate. The actual work itself will be done remotely. QuickBooks and Wave both have features that invite your bookkeeper or your accountant to your books, and you can customize how much access they have in seeing or changing aspects of the account. Your bookkeeper will go into your feed of your connected bank accounts and one by one categorize those transactions. They should also be able to create manual entries for anything that doesn't flow through your bank accounts, like recording assets, and any transactions that occur outside of the business on like a personal card. But you'll need to tell them about these things in order for them to properly add them. You should also expect a quality bookkeeper to be in your books at least once or twice a month, but an exceptionally good bookkeeper will be in your books weekly. This should be consistent. They should also be reconciling your accounts and asking for bank statements at the beginning of the new month so that they can also provide you with monthly and annual reports, particularly your profit and loss statement. You should also be able to ask for additional reports as needed, and they should know what those are when you ask them for it. Lastly, expect to hear from your bookkeeper regularly, at least monthly, if not more often, because not every transaction is apparent. We as bookkeepers don't get to see what you spend on when you buy things from Amazon, and we have no idea if you accidentally purchase something personal with a business card. That's why it's important to double check so transactions can be appropriately categorized. You want to be in communication with your bookkeeper. Your bookkeeper will probably have more questions up front when they're first starting to work with you, but less as they get to know your business and your books better over time. So what should you look for in a bookkeeper? While there's no guarantee that education or experience means someone is a quality bookkeeper, here are a few qualities to require when you're looking for help. The first is a basic knowledge of accounting principles. Like I mentioned before, there are no federal or state requirements for who can or cannot be a bookkeeper. Anyone with a high school diploma can put up a shingle and say they're a qualified bookkeeper. Therefore, when you're searching or interviewing potential bookkeepers, you'll want to see if they've created any content that demonstrates their knowledge. It's also a good idea to ask some qualifying questions when you're speaking with them before you work with them. For example, you can ask if they are familiar with accrual versus cash accounting, or you can ask them if they're familiar with the accounting equation, which you know now. But I think another way to guarantee someone understanding accounting basics is to only work with bookkeepers who have some kind of certifiable education, such as a bachelor's degree in accounting, or someone who holds a certified public bookkeeper or certified bookkeeper designation, which is a CPB and CB respectively. Both of these credentials require passing college-level accounting courses, and basically go through a little extra work in ensuring someone understands accounting. Next, you should look for experience, whether it's in the number of years in the industry, but also whether they've worked with businesses that are within your industry. Not all businesses have the same accounting needs. If you are in a more complex business, like restaurants, e-commerce, real estate, or construction that requires project costing, I highly recommend only working with bookkeepers who specialize in your industry. Also, depending on the software you want to use, make sure your bookkeeper also knows how to use it as well, and they're not just learning it for the first time to accommodate you. Some bookkeepers work exclusively with QuickBooks or another specific software like Xero. So be sure that you ask if you're set on a certain platform. Again, look for professionalism, strong communication skills and organization, as well as good time management. If you do not hear from your bookkeeper for a month or two, you should be very suspicious of whether they're actually working on your books. Lastly, reviews and testimonials go a long way. The accounting industry is very intent on networking. Usually a lot of CPAs know a lot of bookkeepers, a lot of business lawyers may know bookkeepers or accountants, because many of these activities are like taxes, bookkeeping. It's really hard for one person to do it all. So you could get a good referral from your CPA or even lawyers or business consultants in your industry. All right, so how much can you expect to pay for a quality bookkeeper? Now, just to be clear, I'm talking about the bookkeepers who meet the criteria from the last two slides. We are not talking about finding the cheapest, scraping from the bottom of the barrel on like Fiverr or Upwork. We're talking about someone who you can speak to, get to know personally, and trust to do good work. The amount you spend is going to depend highly on the size of your business, how many transactions you typically incur, the complexity and number of accounts in your business, as well as whether you have specific industry accounting needs or require additional services such as payroll or someone who can do your invoicing and billing. So this is a ballpark estimate, but if you're a smaller business or solopreneur with under 100 average transactions per month, expect to pay at minimum $200 per month for basic bookkeeping services and upwards of $500 a month if you are a more complex business or industry, such as with real estate bookkeeping or construction work needing project or job costing. For small to medium businesses with over 100 transactions on average each month, expect to spend at least $300 on the low end and closer to $800 per month if you have high volume and some industry complexity, or if you need your bookkeeper to do something like payroll for a couple of employees. Lastly, as you add services like payroll, invoicing, billing, you're working with a bookkeeper who specializes in a very specific complex industry and that's like all they do, expect to pay at minimum $500 a month. There's no set amount for bookkeeping work, but as with any service firm, remember that you tend to get what you pay for, and it can cost you a lot of money to hire a second bookkeeper to clean up the work that the cheaper bookkeeper did or didn't do that you paid for. So I just want to say I've had a handful of clients come to me after their cheap bookkeeper either ghosted them or just didn't do the work. They did the bare minimum and it was wrong. It happens. If you talk to enough people about bookkeeping, you'll hear horror stories. But do keep in mind that paying for a quality bookkeeper is an investment in your business. We're meant to free up your time for more lucrative activities, while you can rest assured that your books are being done properly, accurately, and help you making better decisions in your business. And of course, I would also be more than happy to help you with your bookkeeping. You're more than welcome to find someone who better fits your industry or who's a better personality fit for you. But I'm here. I'm taking on new clients. In my practice, I like to review my clients' books on a weekly basis. Everyone gets a day of the week, and that becomes their day that I do their bookkeeping and communicate with them. I also provide bank reconciliation and financial reports, such as the profit and loss statement generated on a monthly basis. And if you're really behind and nervous about your finances, I can also help you get caught up, even if it's been multiple years. It's pretty common, especially for folks who are trying to get some previous tax returns completed. So I try to make it as easy and stress-free of an experience as possible. If this sounds like something you need help with, feel free. You can give me a call. You can send me an email. Or the best way to have a scheduled time to sit and talk about your business and your bookkeeping needs, I recommend going on to the Profit Logic website where you can schedule a time to talk with me as well. All right, we've come to the end. I hope you feel proud of yourself because in this short amount of time, you now have a better grasp of bookkeeping and accounting than probably 99% of business owners. We've talked about accounting basics, such as the prevalence of double entry and the importance of understanding the accounting equation when undertaking bookkeeping work, and how this plays out in financial statements and the chart of accounts. Then you learn the main transaction types and how to categorize the majority of business transactions. After that, we talked about a couple of other important bookkeeping tasks, such as bank reconciliation and generating financial reports. And lastly, you're ready to walk away with some next steps, whether it's getting started with free learning resources or hiring a bookkeeper. Congratulations, you are now immersed in the world of bookkeeping and accounting. Thank you so much for taking the time to learn with me today. And if you found this presentation helpful, I just ask for you to simply like this video to let me know that you feel like you're more knowledgeable now than when you first pressed play. I hope your future bookkeeping experience is a positive one. I think you're going to do great. And I hope we get to connect more deeply one day. Thanks again for watching, and I hope you all take care.